Hello and welcome to our Birkenroad Reports video presentation. This semester, our team has been covering Teche Holding Company, the parent company of Teche Federal Bank. Our analysts include Adam Cohen, Zoe Zhang, and Malcolm Joy. In this presentation, we will start by giving a brief overview of Teche Holding Company, followed by a rundown of our 12-month price projection. We will then show how Teche compares to other companies in its peer group. Next, we will expound on the different factors affecting our investment thesis. This will be followed by an overview of our financial projections and valuation. Teche Holding Company, the parent company for Teche Federal Bank, was founded in 1934 and is headquartered in New Iberia, Louisiana. Teche currently operates 20 offices in the southern Louisiana region. The company has achieved 4 consecutive years of growth since 2009. Much of this growth comes from the support of Teche's local clientele. In addition, Teche has grown through the acquisition of smaller savings and loan companies over the past 2 decades. Teche Federal Bank offers savings deposits to the general public throughout Louisiana. The bank allocates its deposits for residential mortgage loans, commercial mortgage loans, and consumer loans. The bank offers checkings, savings, CDs, debit cards, and identity theft protection to both consumers and businesses. Other services Teche provides includes internet banking, ATM check cards, safe deposit boxes, e-statements, and online bill pay. As of June 30th, 2013, Teche has more than $26 million in assets, net loans receivable of $662 million, and total deposits of $647 million. We give Teche Holding Company a rating of market perform and a projected 12-month stock price of $57. This target price predicts a growth of 15.2% from its current price of $49.50. We used a discounted cash flow method specifically tailored for financial institutions, the price to earnings per share ratio, and the price to book value method to forecast our projected price. Now let us move on and examine the regional banking industry in which Teche competes. Banks in the United States are regulated by both the federal and state governments. The Federal Reserve Board oversees all United States banks and creates monetary policy. The Federal Deposit Insurance Corporation, or FDIC, is an independent agency created by Congress that works to preserve the national financial system by regulating financial establishments. Specifically, the Dodd-Frank Act of 2010 limits the operational range of banks, preventing them from making risky investments with deposits. In 2010, the International Regulatory Framework for Banks, known as Basel III, increased regulations on banks in the aftermath of the recession. They increased the Tier 1 ratio from 4% to 6%. This ratio requires that banks keep more capital in reserve. The Volcker Rule of the Dodd-Frank Act prohibits banks from investing in private equity or hedge funds. This regulation reduces risk but lowers potential earnings at the same time. Now let's examine threat of entry. The threat of entry in this industry is low. One major factor that discourages new banks from entering the industry is strict government regulation. Another factor that bars entry into the industry is trust and brand recognition. Many customers prefer banks with a well-known name because such banks are likely to have a large amount of capital with which to back a customer's deposits. Bargaining power of both suppliers and buyers is a major factor in every industry. Suppliers of bank funds, or customers who deposit money, have substantial bargaining power over banks because there are many comparable banks available to a limited customer base. Buyers, or potential money borrowers, have a high degree of bargaining power. They have the ability to choose a lender from a multitude of options, ranging from venture capital to commercial banks. In addition, the banking industry is highly competitive because many banks with the ability to manage nearly unlimited amounts of funds compete for a limited customer base. Many banks offer comparable services customers can choose from to best suit their needs. Teche and many regional banks attempt to maintain a competitive advantage through a unique understanding of customers and the local economy. Regional banks try to customize services to satisfy the unique needs of the communities they serve. Let's compare Teche to its peers. Teche competes with banks with various strategies and sizes in the southern Louisiana region. Iberia Bank Corporation and Mid-South Bancorp, Inc. are 2 main competitors. Based on market capitalization, Iberia Bank is nearly 18 times the size of Teche, and Mid-South Bancorp is nearly twice as large. Teche prioritizes customer support and customized solutions for all clients in order to gain an advantage over its larger competitors with more resources. In addition, Teche's low-risk loan mix and low administrative costs have made it profitable and attractive to investors despite its size disadvantage. Our 12-month target price of $57 reflects the company's solid financial indicators and carefully managed loan portfolio. We believe that the bank's focus on increasing its low-risk, high-profit smart mortgage loans will allow Teche to increase returns without taking on too much risk. The strong local economy, with a low unemployment rate, bolstered by the oil, medical, and seafood industries, will likely provide Teche with an influx of new loan opportunities. Teche is well managed. The company has consistently had a high return on invested capital over the past few years. With a conservative loan portfolio, Teche's non-performing asset ratio is well below industry standard. In addition, insiders hold 27.53% of Teche's equity, and many high-level executives are the largest shareholders. We believe that Teche is motivated to perform for its shareholders, given that management has such a large stake in the performance of the company. As a regional bank, Teche relies on the local economy to provide demand for loans and deposits. The Louisiana parishes or counties that Teche serves all have an unemployment rate below the national average of 7.3%. These parishes also have excellent projected job growth for 2013 and 2014. Because of the strong local economy, we assume the demand for both loans and deposits would rise in the coming years. Teche's loan portfolio strategy involves moving away from riskier loans, such as construction and development, and taking on more loans with less risk, like Teche's so-called smart mortgages. In our analysis, we reduced the weighting of risky loans like construction and development as time goes on to account for Teche's shifting loan strategy. Teche's strategy is to increase its non-interest-bearing deposits, such as checking accounts, and decrease deposits with high interest rates. In our valuation, we use 3 different methods to project our price. The discounted cash flow model estimates the present value of a company's future cash flow or owner's earnings. In our report, we use the discounted cash flow model intended for valuing financial institutions. The price-to-book value method is one of the most reliable valuation methods for financial institutions. This method evaluates a company's book value of equity, which equals total assets minus total liabilities. To determine the price-to-book value ratio, we considered 5 comparable companies of Teche, including the major competitors Iberia Bancorp, Mid-South Bancorp, Bancorp South, Hancock, and Home. Finally, the PE method of valuation measures the price that a stock trades at relative to its earnings and is an effective method to use when comparing companies within the same industry. A PE ratio indicates the price that investors will pay for $1 of a company's earnings. The mean price to earnings per share ratio of Teche's peers is 20.23 times earnings. Using this value times Teche's earnings per share gave a target price of 65.84 per share. By weighting all 3 methods, we came up with our target price of $57. In conclusion, we believe the Teche Holding Company is a solid investment that will perform with the market. Here are some relevant financial statistics related to our projections. The success of the local economy, Teche's intelligent, smart growth strategy, and strong financial indicators all suggest that Teche will continue to grow in the coming years. Thank you for watching our Burke & Road Reports video presentation. You may find a full version of our report at www.freeman.tulane.edu/burkenroad/companies.php. We hope this video was informative and enjoyable. Thank you for your time.